What's going on, guys? Welcome to part two of stocks that I am buying heavy right now. And part one, we went over the first stock, and that was Facebook stock. And I'll link that down in the description down below. But we absolutely love Facebook stock. I keep putting money into that stock. In this video, we're going to go over what is the second stock that I'm piling most of my money into. And this one is a little bit more speculative. There's obviously some, negatives to this business, being it a business out of China, but that is Alibaba stock. And it is just so low now that I can't even ignore it. I've tried to put it, in the back and pretend that my position is, fully built out. But because it keeps going lower, I absolutely love this stock. I don't see it going anywhere. I don't see anything changing. I think the market is just absolutely destroying it right now. And I love that. I love buying stocks that are down, that are getting beaten up. I mean, you're seeing this stock at a PE ratio of 22.97, and that is very low for a company like this, where you're seeing huge growth and it still has huge growth in front of it. So overall, if you enjoyed this video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. So the chart really speaks for itself. Baba stock has been absolutely destroyed. So since October 23rd of 2020, the stock has just been plummeting down and down and down and down. And a lot of this initial negativity towards the stock had to do with China, regulations from China, people talking about, the stock being delisted and other things kind of going on. So that has kind of subsided. There was never really any outcome or turnaround in those events. Basically, we transitioned straight from that into interest rate concerns, which, started back in August, September of 2021. And then that has transitioned directly into, obviously, the Ukraine situation and Ukraine and Russia situation that's going on right now. And with that, the stock has just been beaten down more and more and more and more, and it hasn't been given any chance to recover. And we could see, going back and looking at the business, there hasn't been a time, ever since 2017, and even looking back, further, you have to go all the way back to 2016 for the business to be priced this low. And for you to say, in those, 6 years that the business hasn't gotten into a better position would kind of just be ridiculous. The business is overall in a much better position than it was in 2016, and it continues to be in a much better position. If you look at a similar chart for Amazon has seen insane amounts of growth. And obviously Amazon is a different company, has different, things going for it, and has expanded a little bit more than Alibaba. But they're very comparable in the sense that, right, Alibaba does a lot of the similar things as Amazon. They have a cloud-based business. They have a lot of these other businesses that Amazon is in, but just in the Chinese marketplace, which if you look at it, right, the Chinese marketplace is much bigger than the US in terms of overall population. Consumerism, not so much, but, in terms of population, there's billions and billions of people in China where, the US, you're only looking at a few hundred million. So, overall, Alibaba is just in a great position, and in a great position compared to how it has been in the past. And the stock just, is beaten down on kind of concerns that, in my opinion, are blown out of proportion. So let's take a look at other investors that kind of agree with that opinion. So in part one, we took a look at this for Meta Platforms, but this is top 10 buys in the last quarter, so Q4 of 2021. And you can see this list. So there's Amazon, Visa, MasterCard, then you have Meta, and then you have Alibaba. So Alibaba has been absolutely, bought up by a lot of big investors. And there's one in particular that everyone likes to look at and is one of the best investors, greatest investors of all time. And that is Charlie Munger. And Charlie Munger, he runs the Daily Journal Corp, and he has, over the last quarter, doubled his position in Alibaba. So 27% of his portfolio is in Alibaba, and that's, up 100% in the last quarter. And you can see there's many other people buying. The only one who kind of reduced their entire portfolio, Poland Capital Management. I'm not even sure who that is. But you can see there's a lot of people buying a significant amount of shares. Down here, you can see someone added 300%, First Eagle Investment, 78%, 30% here. But overall, Charlie Munger is the biggest one. He works directly with Warren Buffett, and he's been very, very bullish and talked very positively about the stock. And there's another guy that we'll get to here in a minute who's a very big investor as well, who is bullish on China and overall bullish on Alibaba stock. Before we get into that next investor, let's take a look at their revenue real quick. So revenue, we've seen the same thing, that we kind of saw with Meta Platforms Facebook stock, and that is just continued growth. They're seeing growth that just keeps going up and up and up, and they're at $127.89 billion in the trailing 12 months, while their quarterly revenue is at $31.14 billion. And more importantly, you can kind of look down here and look at their year over year quarterly growth. And overall, they've had, 50+%, 25+%. Their worst quarter is here. That is 6.45%. And again, if we look at that, a lot of that I have to suspect has to do with, the pandemic and everything kind of happening at that time. And, since then, they've seen, again, continued growth. I mean, you're seeing 100% growth here year over year, and then you're seeing, 40, 50% here and continuing into the future. So I don't see any reason why this will slow down anytime soon. Alibaba, compared to Facebook, is a much smaller company. I think their market cap is about half of Facebook stock, where they sit right now. And, they still have plenty of room to grow. They can double up, and they would just at that point be equivalent to Facebook stock, and they could triple or quadruple up, and they would start actually getting close. They still wouldn't even be at where some of these larger companies, where Amazon and Apple and some of these other companies are at. So they have plenty of room to kind of keep growing into the future. And when that growth, and when investors see that growth and see that growth into the future, they'll demand a higher premium and a larger basically price tag. And overall, that's what grows the stock, is the revenue growth and EPS growth. And this company, is not lacking in those two. The last investor that we wanted to touch on is Ray Dalio. And Ray Dalio, if you're not familiar, he ran Bridgewater Associates, and that was the largest hedge fund basically in the world, and I think it still is. And overall, he's kind of stepped aside from the business and has actually kind of taken a larger role in, teaching people what he knows, and it's very kind of inspirational. I've read his book, Principles, and he's put out recently another book, and there's a really good YouTube video on it where he kind of goes into a few different things, where there's one that he goes over the economic cycle, and then another one where he's kind of talking about how countries and superpowers have a cyclical nature as well, that he recently put out. But overall, he is very, very bullish on China, and basically thinks China, will surpass the U.S. In the coming, years or, decades. But overall, I'm not of that opinion. I think China and the U.S., I think they'll get to a stage where, they benefit so much from each other that I think the U.S., is going to thrive as well as China will thrive. And I don't really see, one overtaking the other or negatively impacting the other. But overall, this is a very kind of cool graphic where you see Ray Dalio and his purchases. So he's purchased, Alibaba over the years and sold little portions of his shares as well as the stock has kind of ran up. But, more recently, this is what we love to kind of see and look at. So he has never, loaded over 1 million shares until very recently in, what is this, August, probably Q3 of last year, he put on 2 million shares of Alibaba. And then in Q4 of last year, he put on another 1 million shares of Alibaba. I would not be surprised if now he's putting on, at least another 1 million, if not closer to this 2 million, and averaging down his position even more, because, the stock price is even lower than where he's been at. And you can kind of see here, this is a really cool thing. It shows you about where they think his average price target would be, just depending on, what the average is throughout the quarter. They're kind of looking at that and saying, okay, well, in this quarter, his average was probably around $145. This quarter, he was around $181, $82, and then, in this quarter, $222. So overall, you can kind of see where his closing price might have been, and see that he's continuing to buy the stock. But this is a positive. I mean, Ray Dalio is a huge investor, has had a lot of success over the years, kind of building out his fund and, managing large sums of money. So he's a really trusted guy within the industry. You can see that his he's only has around like 2.51% of his portfolio in Alibaba. So he's staying diversified, but also is very bullish in the stock and loading the boat, you know, with this stock. So overall, that's a positive thing for shareholders, as you can kind of see that he's bullish on it, and continues to be bullish on it. He's not selling out as the stock goes lower. So overall, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Otherwise, have a wonderful rest of your day.